Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening of Thursday, the 24th of August, 2023, 6:10 p.m. Central Time. So I had my paying subscribers move over into cash, and that's where they're at, and they'll be that way until after 9 o'clock in the morning. Why? Because there's a big event in the morning. The Jackson Hole event, the symposium, is all about the United States and our monetary policy. It has evolved into one of these events where sometimes you get major policy announcements coming out of the Fed chair. Powell speaks tomorrow. I wrote what he said last year in tonight's written commentary for my subscribers. And I go over where his game plan was and what he was doing. Now, a year later, we've gone from 0% interest rates to 5.25% interest rates. And inflation has gone headline from 9% to 3%. But we haven't fallen that exact way. Nothing like it, to be frank. You came down a certain amount, nice amount, in core inflation, and it's sticky. Housing prices aren't dropping. Shelter costs, they're not really falling the way the Fed said. The Fed thought that by taking interest rates from 0 to 5.25%, that companies would back off on hiring. They haven't done it. We're still at 3.5% unemployment rate. Unemployment claims as they came out today, both continuing and initial, both on the downside. What we see is that the industrial PMIs are in trouble. We keep backing off. We see the service sector is still strong, waning a little bit maybe, but still basically on the strong side. So what the Fed has done is now a big lag effect. And the question is, when do we get past it? Is just a natural event of summer in America ending, and with it, the kids back to school, the outdoor things that we do coming to an end, the trips that we take during the summer in this hemisphere coming to an end. And is that going to be enough to pull it in? That's one argument that one group with the Fed is going to make. They're going to say, we don't have to go any further, and they're saying it right now. Harkin today said it very loud and clear. The other groups are going to say, no, no, no. This core inflation isn't coming down enough. Employment is still too strong. We must keep going to get that number and get it into the trajectory the way we did the headline, into a steeper decline, not this a tenth, 2/10 at a time. That's going to be the other argument. What does the Fed chair do? Well, you know more than I do because I have no idea. But what he says tomorrow is going to center around that in some manner. So I've given you what I think. Today, we watched an event take place with NVIDIA. My gosh. After market yesterday, the market goes to, 517? Today, it finishes 471. What did the market run into? The Bollinger Band. I know you don't believe me. I believe what I teach. First challenge of it, often there. Now, we were all led to believe this time it's different. This company's so big, it's going to be able to do it. You know how many stories I've heard like that this time it's different? And you always hear me allude in this to Las Vegas because that's how it's built. This time when I gamble, it's different. And again, the percentages are there, be it a slot machine, a poker table, blackjack table, roulette. The odds are known, and the house owns the odds. Well, it's the same thing with some of these indicators. Yes, it could happen. The odds of it, 5% of the time. Okay. Now, we take a look at this market. Where do you think the market has come back to? I'm laughing because I thought today the market was going to take off. Everything was so strong early on. By the end of the day, you're knocking on the door of that 18-day average of closes. Look at how this market has given you this decline today. Remember I said the market early on was strong. Look at the failure. Big outside day down. Remember my outside day course. You're going to want to take it. This tells you that. I'm going to give you I shouldn't even do this. I'm going to have a sale next week on everything that I have. Don't get it now. Wait for a day or two. Take advantage of it, all right? We're building the cart so you can do it right now. Don't tell your friends. Okay, so now the market's coming down there. Here we go with lower highs, lower lows, and the market's doing its battle. And where did it stop? What do I teach you? The line in the sand. So the market's coming up, and I'm looking at it going, what do you do with this? I think it's going to have trouble there. The trend is with lower highs right here. It stopped, and traders got rewarded if they sold into that. Where's the Bollinger Band? The combination of the big support is 43.55 down to 43.47 and a half. These two numbers. The resistance back here. You know you've got something different going on if today's high, Thursday's high, is taken out tomorrow or Monday. Market's going into something else at that point. My outside day course explains the concepts of that. When we look at momentum, you're a market that I just can't, I can't do it. I should have shut the chart off and restarted it. When you lost the embedded reading, the goal was to get to the 18-day average. You hit it and you're right back down, but you're oversold. I see no advantage to anybody in trying to be a hero in front of the 9 o'clock speech by the Fed chair, let alone let the market digest what he's saying. All right? The market's going to move with the algorithm traders, I swear to you, sentence by sentence, if not word by word. They come in, they'll have the high frequency guys all over what he does. In the NASDAQ, you lost the embedded reading right here. The goal was the 18-day average. Kaboom. You're neutral in these markets right now. The Dow has not lost the embedded reading. It's the one I said, if you're a subscriber of mine in the morning, I said, if you're going to be short, you want to stay in this one. This is the monster to the downside. Now you're into areas you got to be real concerned about for profit taking. You're at the first challenge of the 200-day average in a very long period of time, and potentially the lower Bollinger Band with it. The Russell flirted, the word is flirted with losing the embedded reading and said, I don't know what to do with it. I hate selling short into the first challenge of a 200 and 100-day average, and obviously so do other people. Why do I say hate selling? Because when you're under the 18-day average, the bias is down, and I want to be with the bias. It's my filter on what to do. In the T-bond market, I mean, I can laugh at some of this stuff. You lost the embedded reading right here. The goal's the 18-day average. You hit it, you neutralize the chart, and that's all you've done. You have not lost the embedded reading here. On the dollar index, you're still embedded. The resistance is still where it was. I've told you that I had my clients get out via recommendation. If they did it, terrific. I don't want anything on the books in the futures markets the way that I teach trading going into this monster speech tomorrow morning. It is a big speech. In the eurocurrency, you're embedded, bearish. You're against the Bollinger Band. Because you're against it, I don't think the pros took everything off. The fact that you're embedded and against it means they took parts off. That's the one I think they're going through with. In the British pound, I have told traders, this is such a hard pattern when the Bollinger Bands narrow in like that. I don't know how to play that. Is it going to break out to the upside, downside? You're already oversold. What do you do with that? I walk away. Now, September Bitcoin, August goes off the board tomorrow, so you want to run away from that. You don't want to be there anymore. I've now changed the differential on this area chart of differences, and it's now the November contracts. And as you can see, WI keeps getting stronger than our WTI. November Brent got down to the Bollinger Band. Where should it find its first support? Where do I think the pros, because you're not embedded and you're oversold, took some money off the table or all their money? Then I look at WTI, oversold, into that same thing, no change. Now, as I told you, Rebob gasoline has until the 28th to finish up if it's going to have the seasonal move to the upside. It hasn't really been hurt. The buy signal, I think, came in, I'm going by memory here, on the 20th. So we're only at the 25th, so you count back 1, 2, 3, 4, 5. Right in this area here is where it got long. We'll see if it makes any money. I'm always curious on it. And it's a warning sign. I do pay attention to seasonals, but they don't run the trade. The trade's run by the chart. Then in natural gas. In Australia, the companies look as though the three big companies that produce the liquefied natural gas, one of them looks like they have settled the potential of a strike. If one settles, generally the other two fall in, and that's putting the pressure on this market. We saw today only 18 billion cubic feet in storage. We're down to levels that are not normal, and you're not rallying. We'll start putting it back in. Part of what the market was worried about back here, I'm telling you, was that strike, and would either American or Dutch natural gas get bid if people had to go chasing gas from the Asian area of the world via a prolonged strike. It does not appear it's going to take place. And talking about strikes, remember who's getting ready to strike in America? The auto workers. I think their vote has to be done today or tomorrow. I would assume they'll get over 90% say to go on strike, and then 3 weeks from now, approximately, we'll decide, the auto union workers will decide which one to strike. There is zero chance in my mind they're going to get 32-hour-a-week work. There is zero chance they're going to get that much more pay with less hours put in. So where they're starting is from up here. Now the question is how to get them down here. In the meantime, you're probably going to have to use the car inventories you get, and that's going to add to the unemployment rolls because this thing can get dragged out with a 32-hour demand for work. I don't know what planet they're coming from, but it's the wrong one. I can understand them worrying about a lot of AI affecting jobs, but this hours worked. It's like telling, and Goldman's got it right. If you want to work at Goldman and they want you there on a Friday, you don't have to go there. Just don't work for Goldman. If other companies say, we want you in 3 days a week, we want you. If other companies say you can work from home, that's what we've evolved to. Companies that pay you decide what they want to do. You don't have to work for them, and you don't have to be an auto worker. But 32 hours, I don't think that's going anywhere. Don't hate me, union guys. I think it's right to ask for it. I think it's right to negotiate with it. Let's see where it ends up. If you don't ask, you don't get. I'm Ira Epstein. Remember the secret that I told you about next week. Talk to you tomorrow with our weekly charts. And yes, I'll be making some changes on things. You take care.